Ladies and gentlemen, good evening and welcome to the Transformers and Rectifiers India Limited Q3 FY2026 conference call, hosted by Nuvama Wealth Management Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference to Mr. Vikram Datwani from Nuvama Wealth Management Limited. Thank you and over to you.
Thank you. Good evening, everyone. On behalf of Nuvama Institutional Equities, I welcome you all to the third quarter FY26 results conference call of Transformers and Rectifiers India Limited. We are joined today by Mr. Satyen Mamtora, Managing Director and CEO, and Mr. Chanchal Rajora, Director Finance. I would now like to hand over the call to the management for their opening remarks. Thank you, and over to you, sir.
Good afternoon, ladies and gentlemen. A very warm welcome to all of you, and thank you for joining us today for Q3 FY26 earning call. I am Satyen Mamtora, Managing Director and CEO of the company. We truly appreciate your time and your continued engagement with our company. It is a pleasure to connect with you once again as we continue our journey for transformation, disciplined execution, and sustainable growth. Earlier today, our Board of Directors approved financial results for quarter ended December 31st, 2025. These results have been duly submitted to stock exchanges and are available along with our investor presentation. Let me begin by sharing some of the key highlights and strategic developments from the quarter. In Q3 FY26, the company delivered revenues of 704.21 crores with an EBITDA of 11 crore. The performance during the quarter has been exceptional and marks a clear inflection point in our operational momentum. Improved execution, better project conversion, and enhanced capacity utilization and tighter cost controls across the organization have contributed meaningfully to the performance. These results clearly demonstrate that we are back on stride and well positioned to achieve our stated revenue profitability objectives for the year. Particularly significant milestone during the quarter was the receipt of exceptional HVDC repair order from Power Grid. This order is strategically important as it makes TRIL the first Indian origin company to receive HVDC repair order, underscoring our growth, technological capabilities, engineering credibility, and trust from marquee customers. This achievement reinforces our position in the high voltage and advanced transformer segment and opens new long-term opportunities in HVDC ecosystem. As communicated earlier, during the first half of the year, we consciously moderated fresh orders intake. This was deliberate and strategic decision aimed at aligning with new orders with extended delivery schedules, strengthening execution discipline and ensuring optimal capacity planning. I am pleased to share that this approach is now yielding results. Looking ahead, we expect strong order inflow during the second half, supported by a robust and diversified UEOB close to 8,000 crores across domestic and international markets. In parallel, we are making steady progress on our backward integration, which is a critical pillar of our long-term competitiveness, margin sustainability, and supply chain resilience. We have planned 6 backward integration facilities and execution is progressing as per schedule. The CTC plant is targeted for commissioning in FY26-27, followed by pressboard facility in quarter 3 FY26-27 and RIP bushing plant in quarter 4 FY26-27. Along with the first phase of our fabrication facility during the same period. I am happy to share that civil work of all these facilities has already been commenced and equipment orders are firmly in place. These initiatives will significantly enhance our in-house value addition, reduce external dependencies, and improve cost efficiency over long and medium term. Alongside backward integration, we also continue to expand our core manufacturing footprint through organic capacity expansion. Our Changodar facility expansion is on track and completion on Q1 FY26-27, while Moraiya is expected to be operational in Q2 FY26-27. These expansions will support higher volumes, improved execution flexibility, and enable us to cater to a strong demand visibility we see across all our order pipeline. For the full financial year, we remain confident of delivering at least 25% revenue growth over FY25. We are targeting revenues approximately 2,600 crores, along with EBITDA margin of around 16%. This confidence is underpinned by strong execution visibility, healthier order mix, benefits from operating leverage, and structural improvements that we are making across the organization. Equally important, we continue to strengthen our governance framework and internal processes. Corporate governance, compliance, and transparency remain at the heart of everything that we do. I am particularly proud of to highlight that we have declared our audited financial results within 8 days of quarter's close, reflecting our processes, discipline, and commitment to best-in-class disclosure standards. Before I conclude, I would like to sincerely thank our customers for their trust, our employees for their dedication and resilience, our suppliers and partners for their continued support, our board members for their guidance, and the most important, our investors for their continued confidence in our long-term vision. Together, we are building future-ready organization with the ambition to emerge as a global leader in the transformer industry. I now shall invite Chanchal to take you through the financial performance in greater detail. Chanchal, please.
Yes. Good evening, everyone. Thank you, Satyen sir, for your insightful leadership remark and for setting the strategic context for the quarter. It gives me the great pleasure to address you that today as we discussed our Q3 FY26 performance, a quarter that clearly reflects the strength of our execution capabilities and resilience of our business model, and the benefits of the strategic initiative we have been implementing over the past several quarters. I'm pleased to report that Q3 has been a strong quarter for the company, marked by a sharp improvement across all the key financial parameters. Revenue on the standalone basis from the operation stood to 704 crore rupees as compared to 428 crore rupees of Q2 FY26. The growth was driven by the improved supply side normalization, higher plant utilization, and timely execution of the projects across the key segments. The momentum seen during the quarter validates to our confidence in a strong second half of the year. EBITDA for the quarter came to 114 crore rupees with the margin expanding to 16.18%. The margin improvement was preliminarily led by the better operating leverage, a higher share of execution from the healthy margin orders, and early benefits of the cost optimization. Profit after the tax is to 71 crore rupees, reflecting not only the strong operating performance but also the disciplined financial management across the organization. Further, on consolidated basis, revenue for the quarter stood 737 crore against the 460 crores during Q2 FY26. EBITDA stood to 129 crores and PAT to 76 crores. Importantly, Q3 also marks a turning point in terms of the structural margin improvements. We are confident that margin sustainability will improve going forward. The backward integration facility and the developments are expected to further enhance the cost efficiencies and reduce external dependency over the medium terms. Looking forward, we enter to Q4 and the next financial year with the strong visibility. Our order book remains robust, execution pipeline are healthy, and the plant utilization levels are expected to remain elevated. For the full year FY26, we remain confident of delivering the revenue of around 2,600 crore rupees, along with the EBITDA margin of around 16 to 17%. Beyond 2026, our focus remains on the profitable growth, return ratio improvement, and disciplined capital allocation. Before I conclude, I would like to express my sincere appreciation to our team across operation, finance, supply chain, and projects for their relentless focus and execution excellence. I would also like to thank our board and investors for their continuous trust and support as we work towards building a strong, more resilient, and a future-ready organization. With that, I conclude my remarks. Thank you once again for joining us today. We'll now happy to take your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Anvikshit Vijay from Global Consignment Research. Please go ahead.
Yeah, hi. Am I audible?
Yes.
Yes, thank you for the opportunity. So I just had a few questions in mind. Last quarter, I remember you telling that we had about a deferment of 100 crore in revenue because of the monsoon. And if we adjust this quarter's revenue to that, the adjusted revenue growth comes to about 13%. Is this the normalized that we're looking at going forward?
Vijay, it was not 100 crore rupees, it was 70 crore rupees, 70 to 72 crore rupees. All right.
Okay.
That benefit we got it in this, but also we are around 40 crore rupees of the same revenue which we could not able to take in this quarter also.
Okay, sir. Okay, thank you so much. And one more question on that. And if we are targeting a $1 billion revenue by FY2028-29, it means that we are targeting about 48% CAGR in top line from the current levels. Can you help us understand what will drive the growth from here?
Look, Vijay, we have been guiding about the $1 billion or 8,000 crore rupees revenue for FY28-29. This has got the various factors into that. Not only the growth of the transformer business, but also the growth of the backward integration facilities what we are putting up. Right, the backward integration facilities itself are going to give us a robust business, as well as the growing demand of the industries is going to give us the huge amount of the new businesses. As we see that today we are at around 5,500 crore rupees under executed order book, and by close of this year we'll be having around 8,000 crore rupees of order book hand, and we expect the same growth is in coming years, and that is driving us for that.
Okay, sure. If I may just squeeze in one more question, may I?
I would appreciate if you can join again because there are lots of people in the line.
Okay, sure. Thank you so much.
Thank you.
Thank you. The next question is from the line of Manish Otswal from Nirmal Bang Sector Private Limited. Please go ahead.
Yes, sir. Thank you for the opportunity, sir. My question on our order book and the inflow number. So I'm confused with that number. So like it is mentioned Q1 number because Q1 is also 665 crore only. So is it typo error or you can confirm this Q3 order inflow was 665 only?
It is 65. It is 665. There is no typo error.
There is no typo error. Okay.
Yes.
Sir, if you look at the order book of last quarter, it is 5478 crore, and we executed the order revenue in this quarter 737 crore. So if you knock off that and take the closing order book, the order inflow works out to 708 crore. So why there is a mismatch in the mathematics?
So this is not a mistake in mathematics. Basically, when we do the order book, we have there are certain price variation factors also there, and there are certain the bought out items there, which generally does not reflect into the order books. That is why this difference comes.
Okay. And lastly, sir, on this order book, order pipeline, which was in Q4 was 22,000 crore, now it is 16,500 crore, and the YTD basis compared to last year 9 months versus this year 9 months, 18.4% decline. The order pipeline is down by 25%. So, how do you see the visibility and where will be ending the order book, sir? That's my question. Last.
Manish, we have, as I pointed out in my speech also, we are taken a deliberate decision that we shall pace ourselves in taking in inflow of orders, so that, we do not have our order book beyond 18 months. We want to limit ourselves to an order book of 18 months. Beyond 18 months, it is not very viable, because we have seen in the past also we faced some issues. So 18 months is where we are limiting ourselves. That 18 months is the highest time limit where we want to execute a certain order. So we have been pacing ourselves in terms of taking orders, and also pacing ourselves in terms of new capacity that is going to come. So we are very confident that when we close this year, we will have 8,000 crore order book in hand.
All right. Thank you very much. Thank you.
Thank you.
Thank you. The next question is from the line of Samarth Khandelwal from ICICI Securities. Please go ahead.
Am I audible?
Yes.
Congratulations on the HVDC repair order. May I know, going ahead, once we complete the order, which technology of HVDC would we be bidding for?
It will be our own HVDC, indigenously made HVDC. So currently we are repairing this transformer. Once we have to pre-qualify for any tender that comes in future. So once we repair this transformer, which has successfully been commissioned, we shall qualify for our own technology of HVDC.
So right now there is LCC and VSC based. So it will be a different one from that.
Yes.
Okay. So my next question is, if you could list out the capacity that we have right now, and when and how much would be getting commissioned. If you could just confirm that once again.
Look, at present, we have the capacity in our Moraiya plant is around 27,000 MVA. Changodar is around 12,000 MVA, and Odhav is around 1,200 MVA. So that is our capacity at this moment. And the capacity new which we are going to add up in the next financial year is 15,000 MVA in Changodar in Q1, and 22,000 in Moraiya in Q2.
Okay. Okay. Thank you. And sir, lastly, how does the prices or increase in the commodities will affect our margins going ahead?
We have the price variation.
Most of our orders are protected by price variation clause. So we shall be protected, but it is again one of the reasons why we do not want to book ourselves beyond 18 months.
Okay.
So we are protected with IMA price variation clause. So there is no problem there, but we still want to protect we still want to not take orders beyond 18 months.
Basically, the reason behind that is that we don't want to block the capacities at present when we see the good business at the higher margins. So we just want to leverage on that.
Okay. Thank you, and all the best, sir.
Thank you.
Thank you. The next question is from the line of Vedant Sarda from Nirmal Bang Securities Private Limited. Please go ahead. Hello, Mr. Vedant. Please go ahead.
My all questions have been answered. Thank you.
Thank you.
Thank you. The next question is from the line of Akash, an individual investor. Please go ahead.
Good afternoon, sir. Congratulations on very good results.
Thank you, Akash.
Thank you, sir. I wanted to understand your views on the current rumor or the news which is going on. Basically, Reuters have claimed that the Chinese companies would be allowed in power sector or maybe allowed to participate in the electricity or power sector related bids. So my question, I think at this stage it will be difficult for you to comment whether that news comes through or not. But my question is on the price competitiveness, like how well we are positioned domestically and globally, And how do you see if this rumor comes to actualize in few months, how well prepared?
Akash, from what I have read, the Chinese companies will still have to manufacture in India. So there is only one Chinese manufacturer by the name of TBA who is operating in India in the transformer industry. And they are pretty much booked themselves with orders from Adani and Reliance and other companies, other EPCs. So I don't see there much that much affecting us in the long term or in the short term.
Right, sir. Right, sir. And so my second question was on the news of Mr. Mukul Srivastava, his resignation coming through, and Mr. Satin Mohammed taking it forward. So what is the management plan going forward? Like, would Mr. Satin continue, or would you look for external resources for hiring a new CEO?
I shall continue as the CEO and the MD of the company till such time that we decide that we are ready for a CEO now.
Thank you, sir. Thank you, sir. My all questions are answered.
Thank you.
Thank you. The next question is from the line of Aman Kumar Jain from Finwave Global Opportunities Fund. Please go ahead.
Hello. So, sir,
yes.
Congratulations on a strong set of numbers. In
Thank
the
you,
last
Aman.
earnings call, you mentioned a shortage of bushings that led to supply chain disruptions.
Yes.
You have indicated that your new facility is expected to become operational around June this year. So could you share what capacity you are targeting initially?
So we are targeting, you're talking in terms of number of bushings or KV of bushings?
Both, sir.
So we are, in the first phase, we are going up to 245 kV RIP bushings. Then we are working our way forward in the second year of manufacturing to 400 kV RIP bushings. And we are close to about 7,000 bushings in the first year of operation.
Okay. And sir, also as per my understanding, acceptance and qualification of such critical components usually takes significant time. So how should we think about ramp up and customer approvals in this context?
I think there is one caveat there. If we start getting our bushings tested and it is just a type test that we have to do. So if our bushings pass all those type tests, we should be approved by all makes. Our OIP bushings currently are approved by almost all electricity boards and PGCIL also. So getting RIP bushing approval is not going to be very difficult for us.
Okay. And
if you look at in terms of the wherewithal to get the approvals, we also have that in terms of we are a transformer manufacturer. There is a certain credibility behind TARIL. So we have all that wherewithal also in terms of transformers, in terms of bushings.
So up until what time do you expect an optimal capacity utilization?
By second year of operation, we should be at 70 to 80% of capacity utilization.
Okay, sir. Thank you. That's it from my end.
Thank you.
Thank you. The next question is from the line of Sandeep Agarwal from Naredi Investment Private Limited. Please go ahead.
Hello, for the opportunity. So my question is, what is our cash flow position for 9 months? As 6-month cash flow operation is cash from the operation is minus 34 crore. So what is our cash flow position?
Sandeep, we are in the cash flow positive at this moment, right? I don't have the right figure right now to give you, but yes, around 30 to 35 crore rupees is we are on positive. Apart from that, we have around 275 crore rupees of the cash deposits with the bankers. So that way, we are quite okay in that way.
Okay. So my next question, what is your margin visibility in the next 1 to 2 years? Now, what is the sustainable margin?
Margins will stay stagnant at between 15 to 16%. We don't see much variation in margin. The only variation that can happen is 1 or 2% in margins. That is in terms of our operational excellence that we are looking at. So that is the only way, place where we would be able to get a better margin. Otherwise, this 15 to 16% margins is where we will be at.
Okay. So this last question.
Sandeep, I just add up into that 15 to 16% margins, which what MD Suresh is mentioning is on the product side, right?
Okay.
And once we will work out on a better operational efficiency and better leverage of the resources, the margin is going to be increased, as he said, by on 200 basis point.
Okay. So just last question related to the industry. So what is the lag time between between order and supply? Just want to know. Currently, it's 3 months, 4 months.
The lag time is close to between 24 and to 28 months. We want to bring it down back to 18 months. So that is the reason why we are, again, being very cautious now. So currently the lag time is around 24 months.
Okay. Thank you. Thank you, sir.
Thank you. The next question is from the line of Anupam Goswami from SUD Life. Please go ahead.
Hi, good evening, sir. Congratulations on the good set of numbers.
Thanks.
So my first question, that the expansion in Changodar and Moria, I believe it has got delayed by 1 quarter. Now that we are saying the first quarter. And on that note, given the order book, shouldn't we be able to execute the entire order book in 1 year, I mean FY27, given our now expanded capacity by then?
Will take some time. Very honestly, you will expand the capacity in terms of manufacturing of transformers. So where will you get the CTC from? Where will you get the bushings from? Where will you get the CRGO from? All that capacity is still not fully capable to cater to whatever expansion that we are doing. So it will take time to gear up again for us to achieve what we want to achieve. And the best thing for that is put our backward integration plans to come into action very soon.
Okay. So current order book is again about 18 months of execution time.
18 to 24 months, not 18 months, 24 months.
Okay. And so this last question on this, you mentioned 15 to 16% margin, and then 200 basis points can improve above that due to backward integration and efficiency?
Yes.
Okay. So hopefully by FY28, that I think the expansion will also come into good utilization, and that there we can see some.
Yes.
Okay. Thank you, sir. I'll join back in the queue.
Thank you. The next question is from the line of Venkatesha R.J., an individual research analyst. Please go ahead.
Hello, sir. Thank you. Thanks for giving me an opportunity. My only one question I have. How about that World Bank debar thing? Can you throw some light on it? Because they had given a deadline till this, if I'm not wrong, till this, that January 15th or something like that. Thank you.
Venkatesh, first of all, I would like to tell you that there is no debarment from the World Bank as of now on us. Second point is that World Bank has given us the timeline to reply to your queries by 12th of January. We are filing our reply in this particular week. Probably today only we are filing the reply. And we hope that in next 2 to 3 weeks' time, this will be settled.
Thanks a lot, sir. Thank you. That's all, sir. Thank you.
Thank you. The next question is from the line of Nikhil Abhyankar from UTI Mutual Fund. Please go ahead.
Yeah. Thanks for the opportunity, sir. Just one question. I'm not sure if anyone has asked. So there are just reports coming in today that government is thinking of allowing Chinese imports and power equipment. So just wanted to understand your views on this. If there is any traction to this idea, or is the government actually thinking of allowing Chinese imports?
Nikhil, so I just answered that question earlier. Probably you were not there on the queue. Under any circumstances, these Chinese manufacturers will have to make transformers in India. And currently there is only one Chinese plant, which is making transformers in India.
Right.
And that Chinese plant already has enough, is also fully booked for next 16 to 18 months. So I don't think there is going to be a lot of variation in anything in terms of transformer manufacturing.
And I also add, Nikhil, if these rumors keep coming actually.
No, it's not a rumor. It is come.
And they will also take, one more thing is there. If any new foreign player is coming, they need to take the approvals of the product. That will also take plant and product both. That will take time.
Okay. So at least for 1 to 2 years, you believe that that won't be a problem?
Yes.
Okay. Understood, sir. Thanks a lot and all the very best.
Thank you.
Thank you. The next question is from the line of Bala Subramanian from Arihant Capital. Please go ahead.
Good evening, sir. I'm audible.
Yes, ma'am.
Sir, what is the current revenue contribution and growth outlook for transformers, serving renewable and green hydrogen applications?
Okay. Ma'am, first of all, green hydrogen application demand actually has not started coming up in India as of now or anywhere in the world also. Probably we are a little away from that. So once that will start coming up, we would be able to tell, or anybody would be able to tell more about that. Renewable energy, our portion is increasing now, and once our Changodar facility will be in place, because we are putting up a dedicated line for there, then we will have a major higher portion of renewable energies from that.
So my second question, could you please share our working capital situation in Q3? And our goal is to be net debt free in next 18 to 24 months. So what is that planned mix of operational cash flow or any equity raises or asset sales to achieve this net debt free status?
Okay, as working capital is concerned, we are in little better position than what we were in quarter H2. H2 we were having a working capital of around 125 days or something. We are now nearing up to around 120 to 22 days time. And second portion is this net debt free. Yes, 18 to 24 months is the timeline which we wanted to become net debt free, and we are working on that on that. And first and foremost emphasis on that is through the internal resources, right? And our working capital, you need to understand one thing. It is a heavy capital intensive product, so working capital has to be little bit higher side, and particularly when we are importing the materials, then this will be on the little higher side. Though our goal is to reach 200 days level, but we will see that how do we reach into the levels. But yes, so we will be keeping by this year end. We should be near to 120 days levels.
Okay, sir. On the debt side, sir? Actually, our goal is to be net debt free in next 18 to 24 months.
That I said that is intact. We are working on that. We will be net debt free in next 18 months time.
Okay, sir. So my last question, I think only 2 qualified vendors for certain specialty furnace transformers. And why only 2 qualified vendors in this industry, and what are the technical barriers to entry here? and what is the opportunity size, and how sustainable the pricing power is of the two qualified vendors?
So, furnace transformers, the load rating on these furnace transformers is very different. So, the furnace starts with very high power, high current, and the voltage is very less. So, a lot of people avoid taking this risk and sudden jerks to the transformers, and that is the reason why. And the other thing is, if a furnace transformer fails, the whole furnace production goes zero. And with the investment that people have done in their factories for melting steel, it is very difficult for people to cross that barrier and let anybody else in. That is the reason why we are able to sustain in this market, because of our credibility and quality of our transformers.
What is the opportunity size, sir?
Opportunity size is very skewed, not very big, but yeah, close to about 200, 300 crores.
Okay, sir, got it. Thank you.
Thank you. The next question is from the line of Chirag Shah from ICICI Direct. Please go ahead.
Yeah, hi sir. I have just one question. As you mentioned that you will be ending with a FY26 backlog of 8,000 odd crores. Right.
Sorry, sir, I was not able to hear you clearly. What are you saying, sir?
I just want to understand that on one hand, you are saying that you will be ending with a backlog of 8,000 crores by FY26, that is March 26.
Yeah,
right?
close to about 8,000 crores, yes.
Yeah, close to 8,000 crores. And if I just look at the first 9 months, our inflows have declined double digits. They are approximately somewhere around 1,800 odd crores. And my closing backlog as of Q3 is 5,400 odd crores. So if I just do a back of the envelope calculation, the implied order inflow minus your execution for 4Q implies the order win of almost 3,000 crore plus. So what gives us the confidence that we'll be able to book such a big number in one quarter of the year?
We have many inquiries in pipeline which are about to finish or close. In this quarter, most of this will be getting awarded to us. But anyways, Chanchal will give you a better explanation on that.
Chirag, if you see, basically, generally, most of the PSUs, they come up with the requirement in quarter 4, traditionally. And quarter 4 has been always the biggest quarter in terms of the supplies as well as in terms of the deliveries and as well as the new requirements, right? If you've been seeing in last year FY25 also, we got 2,400 crore rupees or 2,500 crore rupees of order, right, in one single quarter. So that is the confidence and the kind of the inquiries what we have the pipeline at a very, very advanced negotiation are going to basically give us the orders pretty soon as in this month itself. So that's the confidence what we have into that, right?
And my final question is more from a longer term perspective, let's say for the next 4 or 5 years. So we do have a target of $1 billion in terms of revenues. But post that, even if we achieve that, given a lot of companies are putting up capacities in the transformer sector, how long is the runway for us in terms of growth, and how will pricing pressure be there when new capacities come up, and when at a stage where the industry will mature at some point in time, and what will be the margin at that point in time?
Okay.
That's from my side.
Chirag, this question, we have been answering this question for quite some time. So first of all, whatever capacities are coming, they are not good enough for the demands which India is forcing in next 10 years time, right? There is not going to be any problem in terms of the demand in coming next to 7 to 8 years time. And basically, new demands like EV demands as well as the replacement market is also going to add up into that. I just mentioned in one of the last questions also, the hydrogen demand has not even started coming up into the country. So this is the thing. And as far as TRIL is concerned, please understand, though the transformer remains a big focus for us, but we are diversifying ourselves into the backward integration product. and they are going to yield us also in some time in a big numbers. So that is going to be the runway for the organization itself. And as far as industry is concerned, next 10 years is we don't foresee anything problematic, and then the sustainable growth will come up.
Thank you, sir. That's it.
Thank you. The next question is from the line of Tushar Pendarkar from Ventura Securities. Please go ahead.
Hello. Sir, thanks for the opportunity. Sir, in Q4 FY25 and Q1 FY26, we reported 35% gross margin. And we believe that that was the normal margin because of the backward integration happened. So when can we achieve? Can we take the FY27 as the year with the 35% gross margin?
It is FY28.
Okay. And will it provide further room for expansion to 40% with the further backward integration?
Definitely.
Okay. Thank you, sir. Thank you. That's all from me.
Thank you. The next question is from the line of Aman Bansal from PESP. Please go ahead.
Hello, am I audible?
Yes, Aman.
Yeah, congratulations on the amazing set of numbers, sir. All of my questions have actually already been answered, so yeah.
Thanks, Aman.
Thank you, Aman.
Thank you. The next question is from the line of Kushal Kasliwal from Inved Research. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, although this quarter looks like a 30% growth, but I think last quarter you announced that, there was a copper conductor shortage, import blockage of around 160 crore. And then there was this 70 crore also, I think this question was also earlier asked in this phone call. So sir, if we add both these figures, roughly 230 crore worth of orders were going from Q2 to Q3 this year. So if we remove that 230 crore worth of orders, our YY growth is actually is in negative.
Kushal, I think you have misinterpreted what we said in last time about the CTC. What we said it is not 160 crore. We said 16 numbers of the jobs CTC that got stuck in ports, right? So 16 jobs got stuck in Dan. That is two in the month of May and June. So which has received in the month of July, and then the production has started coming place. Understand one thing that has affected in our revenue of the Q2 as well as on the Q3 also, because when the jobs get almost there for 25 days at the port, we could not able to move the next jobs from the China and Korea. So that is why this has got the cascading effect on all the things, right? And around 70 crore rupees, which were basically booked into the system order, but because in the system, but indices does not allow us to take into the revenue, that is affected. The actual effect was only 70 crore rupees for that quarter, and the same kind of effect we are also facing up into this quarter around 40-45 crore rupees also.
So net there is around 30 crore of revenue which has come from. So if I remove this 30 crore, then also our growth rate has
30 crore is windfall from the past quarter.
Okay. Okay, I think I get what you are saying. I think my next question was around the CTC and CRGO situation. I think last time we said that the CRGO situation was, prices as well as supply was limited. So has that solved now? Has that become normal now?
It is not solved. We are providing for it, but it is work in progress. It is always work in progress. The kind of growth that Indian transformer industry is seeing It is always a work in progress for all transformer manufacturers.
Got it. Sir, on just your backward integration efforts, I think you were doing in-house CTC manufacturing and a couple of more things, radiators and all. So, will that backward integration effort also work for our HVDC transformer demand, or will for HVDC we'll have to we cannot use the backward integration which we are doing?
It will work for all sorts of and all kinds of transformers.
Okay, even the CTCs also?
Yes, the CTC also, except for the bushing, I think all transformers, everything in the transformer, yes.
Okay. Sir, just last point on HVDC. Sir, when do you expect to meaningfully see demand from HVDC transformer?
So once we've repaired this transformer and it has been commissioned successfully, we should see PGCL approving us for manufacturing these transformers.
And then the orders are expected post 27?
Post 27, yeah, post 27, yes.
Got it. Thank you, sir. Thanks.
Thank you. The next question is from the line of Viren Samir Deshpande from AlphaStreet Investments. Please go ahead.
Hello, sir. Congratulations for the good results. We had last quarter was a horrible one for not only the business but that World Bank issue. But I think the management, as it has been mentioned today, that we will be filing the reply very shortly, in a day or two, because 12th was the last date, I heard. So if you are filing today, do we expect it to be solved very quickly, as you mentioned, in 2-3 weeks?
Very honestly, we do not know what the World Bank process is, but we should get something sooner.
Actually, that doesn't affect us financially, that was true, but unnecessarily some corporate governance issues, etc. The market has, the share price indicates that there was a big fear on that issue. But hope you people are in a position to sort it out very quickly.
We are working towards getting it resolved.
Good. And regarding these expansions, which we have been mentioning, someone was saying, you mentioned that everything, all the expansions which are as per our plan, and the production expansions, etc., will take place about almost, we will be having 70-75% growth in our production capacity in the next year?
No, our plant utilization will reach around 85%. Plant utilization is what we said, that it will reach 85%.
By next year end?
Yeah, by next year end.
Including the expansions, because you mentioned some...
Yeah, including the expansion. Including the expansion.
Expansion will...
Expansion in Q1, I think you will be having some 15,000 MVA, and in Q2 you mentioned 22,000 MVA.
Yes.
So 37,000 MVA will be added in the next first half.
Yes.
So that rate compared with the current capacity of 50,000, it translates to 74%. So is my understanding correct?
Sir, my current capacity is around 40,000, and with the new expansion, we will reach to the 75,000 MVA.
Okay, very good. And congratulations to you all and Mr. Rajora also in particular, that as promised, you have been in a position to present the results in the first week itself. So let us keep this tradition, and the market will always reward this type of gestures.
Thank you, Viren. This is the organizational efforts which is being paying off us.
And in this capex also, which we are having for this expansion and for the backward integration, and when do we expect this backward integration to be completed?
So the backward integration for the CTC plant, as I mentioned in my ring, one is CTC plant is Q1 FY26-27.
Okay.
Moria expansion will be in FY26-27, Q2. Bushing will be Q4 FY26-27, and pressboard will be in Q3 FY26-27.
So next year ending, almost all the things will be completed. So 27,
Yeah, all
28
our
will be the
projects will be
financial year.
Yeah, all our projects will be completed.
Okay. So after that, we expect about 2% growth in margins also?
Yes, sir.
Yes.
Okay. Thank you, sir, and all the best.
Thank you. Thank you.
Thanks. Can we take the last question, please?
Thank you. The last question is from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, am I audible, sir?
Yes, Deepak.
Yeah, so most of my questions have been answered. Just few things. Now, you mentioned FY27 and 8,000 crores order book, given the execution in fourth quarter and current unexecuted order book of 5,500 crores. So we expect around 3,500 crores of order inflow in the fourth quarter, right? Would that be a right?
Yeah, that would be a fair assumption.
Okay, and given that you mentioned that even 2,500 crores we have done in last year fourth quarter, so this is something which looks achievable to you, or
yeah, it is absolutely achievable.
Okay, and what will drive this order? I mean, can you throw some light where
we have quoted in many tenders close to about 16,000 crore tenders, and most of these are on the verge of finalization. And the other thing is, they are also thinking that beyond 18 months, they also do not want to expose themselves. So they are also trying to control, pace themselves in placing the orders.
Okay. But generally, our order book, whatever 8,000 crores we are targeting.
This is only not taking orders or not getting awarded for orders is only a question of pacing the awarding orders.
Okay. And the execution timeline of this 8,000 crores which we are expecting to be closing by FY26 would be around what, 18 to 24 months?
Approximately 24 months.
At max, it should be 24 months, not beyond 24 months. We are trying to limit ourselves to 18 months.
Okay, understood. And given this year we are looking to grow about what, to 20-25%, right? From next year onward, the CAGR that we need to grow to to $1 billion or 8,000 crores of 45-50% CAGR. Is that what we are targeting from FY27 onwards?
Sir, that is right. And understand one thing, in that drive, there are two major factors which are going to contribute apart from our present capacity. The new capacity which we are going to add up around 35,000 MVA, and the backward integration revenue which we are targeting to contribute that thing. So those two are the major contributors going to play in that goal, sir.
And all this are coming from first quarter till fourth quarter, right? And in part.
Yeah.
That you have already mentioned. So what would be our optimum revenue potential on this capacity? I mean, both 77,000 MVA and plus your CTC and bushing capacity that is coming through.
Yeah,
so at 80-85% utilization, what sort of revenue potential we see?
The $1 billion 8,000 crore rupees revenue is actually we are guiding based on these and all the efforts what we are doing.
Okay. So once you fully utilize all this capacity, 8,000 crores kind of a top line is quite achievable. And just my last thing on the industry side, I mean, what sort of growth we are looking at the industry level, if you can throw some light on that?
Sir, world transformer industry, only the transformer I'm talking about is growing at the CAGR level of 6.7%, and India is growing at the CAGR level of 15%.
And India is growing at 15%?
Yes, sir.
Understood. That would be it from my side, and would like to wish you all the very best. Thank you, sir.
Thank you, sir. Thanks a lot for joining us.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand over the conference to the management for the closing comments.
Thank you once again for joining us today for your continued confidence in our journey. We look forward to your questions and engaging in meaningful discussions. Your insights and support remain invaluable to us as we continue to execute our strategy and create long-term value for all our stakeholders. Thank you.
Thanks a lot.
Thank you very much. On behalf of Nuvama Wealth Management Limited, that concludes this conference. Thank you for joining with us today, and you may now disconnect your lines.
Thank you.